I usually start again. It's either good morning wherever you are or good afternoon. And it's Matt Coleman here from Magnify World, one of the co-founders. We champion the ARVR sector and also emerging technologies in this space. And today we've got a very special guest from San Francisco talking to me in Los Angeles around investment opportunities and where the market is headed. We have Ghia Griarte. She's the managing partner at Ponte Partners in San Francisco. Welcome. Ghia, how are you?
Great. Thanks, Matt. Appreciate you inviting me to this session. I think it's great that you're doing these types of sessions and appreciate the invitation.
Fantastic. And we came across your organization because although you're specializing in and investing in emerging tech and technologies in general, ARVR popped up as one of the items on your agenda. You're also investing in Fintech and SaaS models and various other parts of the business. Can you just tell us a little bit about, first of all, yourself and then your company, about how you got involved being a managing partner?
Certainly, we'd be happy to. Me in particular, I started out as an engineer, then wound up in consulting, and then eventually in early stage venture back in the late 90s. Saw the tech bubble as well as the burst, and then got into the secondary market of investing in the early 2000s when nobody knew what that was. And actually back then there was a stigma around it, but now everybody is flocking to secondaries as an investment opportunity, but also as a way to derive liquidity. And so I've been in the business for over 20 plus years now, most of that in secondary, but certainly a lot in the early stage, throughout early stage, late stage venture, and then secondary, early stage, and late stage secondary as well. Went after my early stage career, ended up in secondary at Saints Capital, where in the early days of the 2000s, we acquired a lot of corporate venture funds. Those were the kind of go-go days of secondary when no one really was competing as much for a lot of the assets. And back then, during the tech bubble burst, there were, discounts, in the 80-70% range, right? Because people were just wanting to get rid of those assets. And so 7 years later, acquired so many assets, Saints, grew to about $1 billion plus under management across all sectors, including healthcare, tech primarily. And then, in the mid, 2010s, 2015 or so, a few of us, went on to do Ponte Partners, which is where we're at now. Founded Ponte Partners because the secondary market certainly has exploded beyond direct secondary to LP to, in order to be competitive, there's a lot of GP restructurings, GP for hire, as well as primary type funds that where you can be a one-stop shop for any GP or seller on the cap table. During certainly my days at Saints Capital, I had exposure to a lot of companies and sectors. Certainly we had invested in Facebook and invested in some gaming companies. We saw a lot of the gaming companies come through, King.com, Kabam, Digital Chocolate, and also saw a lot of the ride sharing as well, Lyft and others. And so now at Ponte Partners, we are focused on a lot of the sectors within technology, but also healthcare. And within the tech sectors, we're focused, as you had mentioned, Fintech, ARVR, simply because of our investment in DAS. As well, we're in SaaS, security, AI, ML, and certainly the growth areas in healthcare as we see these days as a result of COVID and the pandemic.
I was just going to say, what's your also thoughts back, 5 years ago when we started Magnify, the market was really bullish on the ARVR sector, and I think from memory, there was projected to be a new $200 billion-dollar market in all sectors, of course, back then. Then there was a bit of a readjustment, I should say, probably in the last, 2-3 years, really. New projections, coming out at, basically half that, less than half actually, depending on breaking down AR and VR, but it's still a huge opportunity, and obviously why Facebook took, Oculus out of the market and onto their platform. It's great to see that, that investment, is still powering ahead, and also the augmented reality, market, with whether it's, what Snapchat is doing, with face masks, but, Messenger's doing a similar thing, so there is a trend. But what's your thoughts on where COVID has hit now? What the feedback that we're getting in the market from everybody we're talking to is that AR and VR is definitely on the rise. In fact, the independent studios that I talk to in America and all around the world have had lots of new inquiries for business. So I just wondering what your thoughts are on where it's come from in the last 5 years to where it is now.
It has come quite a long way. And, we've seen a lot of analysts' research reports that are really vastly, wide in their range of projections, right? And one analyst will say it's going to be 150 billion by 2025. And then another analyst saying it's 520 billion by 2025. And today it stands, or at least one analyst says it's approximately 19-20 billion in 2019, 2020, depending upon how you look at it. So, and, the growth rates range from, low 20s to high 40s in terms of different analysts. So you can see that it's quite volatile in terms of people's projections, right? I think what we can all agree is that there's going to be significant growth. And as you said, COVID-19 has accelerated some of that growth. And what areas are those? And in terms of augmented reality or even virtual reality, some of those are in the areas of consumer, in the areas of healthcare, and in engineering. And I'll go into some of those, automotive, obviously. But let's say, as an example now, even education and training. So some of the immediate areas would be, education and training, where you have to be socially distant or even remote, right? As an example would be, educating, kids, colleges, where you have to do things remotely. ARVR can supplement or enhance some of that learning with, being able to transport someone, say, for a history class to Egypt remotely using headsets for kids. But to your point about 5 years ago, this was supposed to be a very huge industry today, and it hasn't quite gotten there. A lot of the hindrance has been on the device, the cost of the device, right? And also the application. But let's go back to the cost of the device. In the early days, they were in the thousands of dollars. Now those headsets have gone down to 400. But from a mass market perspective, you really have to be $100 or less is what we have been hearing. And the one of the trends certainly today is really the mobile AR, which is driven by the Apple's announcement of the AR kit and Google's AR Core that will allow you to do AR through your phones, right? And that will be a vastly different, that'll be a game changer as opposed to buying a headset for a couple $400, which, is probably mostly in high-end households. So if you can democratize AR through the cell phone, through the smartphone, then you're starting to get into some really interesting applications. Interesting applications would be like consumer, as an example, where take either IKEA as an example, where you can show the home furnishing on your phone and look at it, walk around in the house and actually overlay that to your own personal environment. is a game changer. And a lot of retailers are looking into this. And as I understand, even the likes of Uniqlo and others are also using, some of that where you can try before you buy using AR type solutions, right?
Yeah, there's a few shopping mirrors starting to appear where it overlays the clothes, obviously, and you can have a quick change out in the open, obviously, so which makes things a lot faster and quicker and, probably smarter, really. We're probably yet to see mass market on that. But, I mean, retail's making a hit, obviously at the moment. I mean, so is the advertising world. But,
Right.
if you're a retailer right now, would you invest in a retailer right now? Or only an online retailer, I suspect? And when did that stop happening from your point of view?
Well, we actually are seeing some retail deals that actually are interesting. But let me come back to kind of a couple of the novel way of shopping for AR. There was a report that says 48% of consumers are saying that they're willing to buy a product if there is an AR component to it, right? Because they can see themselves in it. Unfortunately, only 15% of the retailers in the US today are going to use AR. So there's a bit of a disconnect there with what consumers are saying that they're willing to do versus what is currently available. And in terms of retailers' deployment plans, there's about a 38% or low 30% that they will use AR in their shopping tool. So there's still, the demand outstrips the supply of that tool. So certainly there's good potential there. As it relates to your question around what we would be investing in, we are seeing, in fact, we talked about one this morning in investment committee, which is in the home furnishing space. They aren't necessarily using AR, but they are using artificial intelligence, machine learning, and their revenues as a result of COVID has increased. Let's see, they're like going from, let's say 200, let's even call it conservatively 300 million to 600 million in top line, whereas they were thinking of maybe 30% growth, but now it's getting to be 100% growth, and net income is just accelerating as well. But we feel that you need to make your investments not because of these COVID pops. I think it has to be sustainable even after these pandemic activity, right? You've got to do things. You have to look at the long-term opportunity in addition to the short-term improvement in top-line sales. But certainly there's a lot of opportunity there from an AR perspective.
Yeah, I know one of the latest PwC reports that I saw in the last least 6 months are saying in the next 3 years there should be an extra 6 million jobs created through the industry worldwide, which seems reasonable. But I'm wondering what is the area of focus? I know we were going to talk about DAS later, but the media and entertainment sector is obviously a big one. I mean, and an explosive one with Fortnite. We don't necessarily just have to stick with ARVR here, right? So, it's incredible what Fortnite has done and will change potentially the music industry, because the live event market probably won't be back on track for 3 whole years.
Right.
Is crazy.
Exactly.
And they've got it. What are they going to do? I just noticed that CAA laid off nearly 300 staff last week. The other agencies are letting a lot of people go, whether that's for a period of time. Let's hope they all come back. But where do you see the future of live events and gaming, and how DAS intertwines in the media and entertainment world here? And maybe explain what DAS is first.
Right. So I guess in the interest of full disclosure, we are investors in DAS, which is an online avatar company. They create avatars so that you can have an identity in a virtual reality world. They also provide a marketplace for digital assets, digital characters, for you to, design, develop, create on your own, right? So there's several different opportunities there. But the certainly, while I wouldn't diminish the marketplace, because that has benefited certainly from COVID. Everybody likes that marketplace and all the things that you can buy there, these characters that you can buy there. The AR, the Taffy business unit is developing this ability for you to have a digital identity in any world, right? Whether it's on your phone, whether it's in, if you go into a virtual world, that someone like, say, a VR chat is an example. Those are certainly, that's one where DAS is providing the digital identity. So if you think about it, you're going into a digital world, you're going into a virtual world, and you want to be able to interact with other people, right? And so who are you reacting? Are you communicating and interacting with, right? It's either a likeness of your current self, or you can pick something that is truly imaginary, right? And so people want that flexibility, and actually people like, that whole dress up and changing your look, your clothing, your accessories, and your personality, right? And so you can enter into these worlds. But to your point, you had a question around how is that going to change the live events? So what I see that could be happening, and I've heard other people talk about it as well, that you can, let's say the artist can allow their fan base to put on either headsets in the comfort of their own personal space, whether that's a living room or whatever, and they can experience the concert or the session, but you can actually see others in the audience, right? You can picture others in the audience, but it requires an identity. You have to log on as Ghia or Matt, attending whomever, right? Whatever, suits your fancy, Maroon 5 or, Paul McCartney, whoever, I don't know. But you can definitely see that, and there's certainly a potentially huge opportunity there.
Yeah, I mean, Travis Scott, one of the US artists, I think, drew, did I hear this wrong? Is it 10 million fans that he drew to that? I think it was 10 million fans at some stage. But, I think it's if I was working for a record label and had a 360 deal, which included probably 25% of my gross income these days, I'd be investing in gaming as well, with all the innovations that are coming out. But yeah, it's going to be interesting to see. Also, coming back to DAS, when I was online a couple of weeks ago, the quality of those avatars are absolutely exquisite.
Yes.
They're very, very good quality. Can you tell us how they price those into the market? And because I noticed they're pretty cost effective, aren't they, really?
Yes. The question was, sorry, how are they pricing those?
How do you price that into the market? And is it easily transferable to, as you said, a mobile device and your own avatar on Facebook or anywhere, right, I assume?
Right. So what the company is currently doing, let's talk about the pricing on the marketplace first. So the pricing in the marketplace first is really, very similar to like if you were gaming, how much you would pay for a character, how much you would pay for a skin, how much you would pay for different accessories. And in DAS, you can buy entire scenes, you can buy characters, and you can modify them, right? And actually, you can even sell them, right? If you are an artist, you can actually sell them to someone else who might fancy that type of artistry.
And you do that on the platform itself as well, if you decide to do that?
Yes. It's just like eBay, right?
Yeah.
You can, or any place where you can buy and sell stuff. It's a marketplace,
Yeah.
right? So in terms of pricing, anywhere from 9 to 25 to 30, 40, $50, right? I mean, it's really kind of priced for consumer consumption. You'll be surprised. There are some avid DAS buyers that can buy up to $500 to $1,000 per year on these. I mean, you can get lost, obviously creating your own world there. But as it relates to your avatar, so the DAS, by the name of Taffy as their brand for the virtual identity, they are in discussions with some pretty big brands to provide that avatar platform to everyone. And they should be coming out with an exciting launch fairly soon, towards Q4 of this year, where you can have it on your device, and you can have your own avatar on your own phone, and this is kind of your likeness.
Wow, fantastic! I look forward to that. And
Yeah.
let's talk about some other consumer future devices as well, like smart glasses. Are you seeing many investment opportunities in the development of not just the experiences or the hardware, but some of the software that goes into visualizing this? I mean, I've seen some investments into eye lenses. Personally, I wouldn't wear an eye lens.
Right.
A bit too much for myself. But if I had something like this that I'm wearing, that Apple may be releasing in the future, or
Right.
there's lots of different brands obviously out there now. But what are you? What's the opportunity in investing in the smart glass future?
The one that I have seen as an investment opportunity is really engineering application related versus what was previously the Google Glass, or now you're saying Apple. Yes, I have seen some very compelling application for that when you're using it in an engineering setting and you're on the shop floor and you are doing some maintenance on an equipment where you can actually see the manual and read the manual on your device, your eyeglasses. But in terms of the eyeglasses from a consumer perspective, it's hard to say what. One, you have to get the price point to truly consumer price points before you can have wide adoption. And two, it's really all about the application and what will resonate well, the value it adds for the cost that you're paying. Yeah, certainly you're seeing that in some instances where you can actually look in a certain direction, you can see the services that may be offered if you're looking in a certain direction. That's been tried on driving navigation, right? Where they'll serve you up, I don't know, a discount for coffee for Starbucks or pizza or something, but it has to be really relevant to what you're doing at the time. To me, it's all about price and the value that you're bringing to that particular device. And I think it just depends on the partnerships that they're going to be developing in order to provide, those types of services onto those glasses.
Yeah, it's everyone I talk to has got an interesting perspective, and with the advent of 5G, coming out, right now, right, we're yet to see mass adoption, obviously, of 5G at this stage, but in the coming three to 5 years, it will probably penetrate the smart glass market as that explodes. Hopefully, in the next 3 to 5 years, may take that long, right? If they get the right price point, as you said.
Right, but what does that mean? So, if 3 to 5G, so does that mean it's going to be Wi-Fi to your phone, and your phone is it's connected really to your phone? Because otherwise, you're not really going to get a separate monthly plan for data for your glass, unless maybe that would difficult. I think it would have to be paired via Bluetooth or Wi-Fi with the phone.
Yeah. Well, I don't know about any safety concerns with streaming 5G into your glasses either, but that's another subject for another day, right? Depends who I talk to.
You're touching on some. You're touching on to some pretty potentially difficult topics depending upon your audience.
No, I know. I just wanted to switch it up and talk about possibly some fintech opportunities and how that encapsulates blockchain. I noticed Ethereum was on the rise in the last week. Quite a big difference actually in the market for that. Are you looking at banking solutions or trade solutions, or what have you looked at in fintech?
Well, we've looked at a number of deals, and we've just closed on one recently where they are a marketplace where they are providing loans to small to medium businesses. The ones that tend to be kind of high profile these days are challenger banks, right? And they're called challenger banks because they offer no branches, right? And they and also kind of call it Schwab, but for the millennials, where they are, I'm talking about the Reps of the world, Chimes of the world, and Robinhood, where they're truly online with no branches, and are developing user interfaces that make it absolutely easy to open an account. And so that's what I'm seeing change completely. There are also others where you are seeing, let's say, they're providing loans where your credit score, the quality of you as a consumer is developed through AI because of your social activity, social network activity, anything that can be found online. You can develop already a credit profile of the customer without doing kind of the lengthy process that you typically do with the traditional banks.
Wow, that's different. Not surprising to hear from you, though, but I'm sure you come across some unique opportunities, that's for sure. That sounds like one, but it's a good case, really, when you think about it, because the machine learning is probably going to be right? So, and
you're catching some other stuff that the banks aren't, right? With credit scores, but
yeah. And look, I didn't want to go too much into the TikTok scenario either, but I know you're an investor in Facebook, and everyone's being scrutinized around data manipulation or sales or resell or around that. Do you think Microsoft is going to buy TikTok? Have you heard what are your thoughts on that market? I mean, there's Triller, and another company that's now absolutely exploding. Obviously, COVID's got a lot to do with this, and Snapchat's like premium. Number, I think it's 200 million users a day now on Snapchat. It's crazy. What are your thoughts on the future of social media and the landscape? That's more my general question. Without feel free to answer that any way you can.
I think anyone who is selling anything really absolutely has to have a digital strategy encompassing any and all of the social media. I mean, certainly the big ones with Facebook, Google, Instagram, Snapchat, depending upon your target market. Your question about TikTok, I mean, whether Microsoft, I mean, certainly if it's under US soil, perhaps there will be a little bit, less anxiety if it is US owned and operated. Of course, you can never be certain who I think given our exploration of cybersecurity, you really have to lock the endpoints down to make sure that there really isn't anyone kind of coming from within to to hack your devices. But I think if Microsoft can, it's a trusted brand. I think it's a trusted brand in the U.S. That certainly is better than it being outside of the U.S., owned outside of the U.S. It's amazing to see how different generations move quickly from different social media to social media, and now the social media is really kind of bifurcating to, from originally Facebook and then Instagram and then Snapchat and then now TikTok, right? I think you really have to be nimble to really understand how different generations and age groups are using social media over the years, because it's been very quick. I mean, our investment in Facebook was not through Ponte, just to be clear, and that was previously with another firm when the firm made that investment through Saints Capital. But certainly back then when we were exploring that investment, it was, what's to prevent anybody else from usurping Facebook's dominance, right? Previous to that, there was another social media giant whose name I forgot. And so you've got to really understand the market before you place long-term bets on something. I think that was
that's terrific. Thanks for your comments. I know we're going to round up in a minute, but I did want to talk to you about the future of education, because that's a big change in the market. And, some of the analysts are saying that the third-tier universities, may not be around in the coming year or two if they can't get students back online. In fact, they probably never were online in regards to their online education. And you've recently got Harvard, having a $50,000 course. You're allowed to stay on campus, but you're not allowed to mix with students either. But it's a Zoom course or an online course. Harvard's always going to do well. They've got an excellent brand and name, of course. But, will the students turn a blind eye to education? And should they? And what about using virtual reality, for the future, part of that immersive education side of the business? I just really wanted to get your final thoughts on that.
Oh, that's a very loaded question. And the topic, of course, that could be an extra hour. I have a daughter in college. She was a freshman year and she had to come back home. So this whole conversation about the value of education, now that it's been disrupted, there will be some significant disruption in the education, certainly the secondary education. As far as online, I think the big brands of education, right, the elite universities, I think they will continue to prevail in terms of people wanting that type of education. They also bring the benefit of their vetting students, right, who truly desire, a certain type of education. So I think they will have certain competitive advantages in terms of generating demand for their product. The product is now just delivered in a different mode, and in a mode that may not be as the same experience as the 4 years of undergraduate experience. So, but you can see that the pandemic has shown that there could be different options for delivering content than the traditional, in class. Perhaps over time they provide several different options, but I think that there's still something to be said about the experience of college as, the beginning of your independence, right, which you can't do remote, right? If your parent is going to fund your apartment outside of the house, it better be while you're getting an education, right? But there has been a lot of conversation. I think Scott Galloway was, from NYU, who's a good blogger, talked about the wholesale disruption of college going forward. You could, over time, argue that 50,000 or whatever that tuition will be in the future will change. And I think they're going to have to change their business model at the college level. But online education as an industry, I think, is set for tremendous growth, as you know, as you've seen. I mean, we've looked at some interesting deals as of late. Both, you know, we've looked at Coursera before, we've looked at Udemy. I mean, those companies have been, you know, on the rise in terms of generating tremendous growth as a result of remote shelter in place.
Yeah, you're right. I mean, I was reading that the Udemy CEO went to press in middle of March, I think it was. He was saying they had 6 million customers in February and only 23 million in March. So he was very happy. And look, that's an astounding number, isn't it? I mean, you just got to look at the Zoom numbers, you know, as well and everything else. But online education just seems to be steamrolling. And I think if the colleges and universities can get more of a competitive price point out there, they could probably earn 10 times more money than they could by charging $80,000 a year. You know,
that's a good argument. You know? Yes, absolutely. Yes.
It's your argument about the VR headsets. You know, why can't they be $100 when you've got, you know, $1 trillion company running it? You know, can they not subsidize it?
I think it could be easy to justify that.
Yeah.
I think once you get the volumes up, right? I think once you get the volumes up, you can price it at that level. But you know, when you've got fixed cost to produce X number of sets, you gotta share that fixed cost over a smaller number. But yes, by the law of numbers, you can get there.
Well, that's fantastic. Is there any final comments from you, Ghia, or if you want to give your company another shout out, or where can they find you on LinkedIn? I know you don't want to be inundated with inquiries, but any final comments?
Well, thank you very much, Matt, for allowing me to do that pitch. But, you know, Ponte Partners is looking for interesting business opportunities, ideally profitable or with a path to profitability in the next, you know, year or so, you know, in the Fintech, in ARVR, certainly, in security, education, really tech and healthcare broadly. And so we'll take a quick look and tell you very quickly whether it's something that fits or not. So would love to see that.
Oh, Ghia, look, excellent chat today. I really enjoyed your insights into all those areas. I know it was a lot to cover in 40 minutes here. So thank you very much for your preparation and detail to that. And we look forward to catching up with you again soon. You'll be able to find this on YouTube and all our social channels over the coming week or so. So we look forward to keeping in touch, and you have a great day.
Thank you, Matt. I appreciate the time.